Hello and welcome. Thanks for coming along, all of you. I know it's been hard to separate yourself from that amazing dessert spread that you had. I'm James Mackintosh. I'm a columnist at the Wall Street Journal. We're here to talk about FinTech, specifically banking on the, well, in the UK, open banking is the name of it. Similar approaches in lots of countries, either starting or being worked on. We've got a great panel to talk about it. Starting at the other end, we've got Louise Beaumont, who has worked on all sides of this, including the trade side, advising and investing in companies working on this. Elena Liskowska, who's Senior Managing Director and Head of European Specialty Finance at Vardy Partners. Gavin Littlejohn, who's Chairman of the Financial Data and Technology Association, which represents FinTech companies globally. And Ajay Vij, who's Senior Vice President and Industry Head for Financial Services at Infosys. Now, the basic principle that we're trying to get at here, I think, is just how much are banks going to be affected by this, and how much is the world of finance going to be changed by having data, your data, available to FinTech companies that want to connect to the banks and have access to it. I think if we start with Louise here, one simple way of looking at this is the way that it was set out by the regulator when they implemented open banking in the UK, which was that banking is basically a hyper-profitable cartel and there's very little competition. And no, they didn't use exactly those words. But the basic principle is that they wanted to encourage competition, and it was really about encouraging people to move their banking services around. But I think you think it could go a lot further.
There were really several interesting thoughts in the regulator's head when they came up with this idea of reuniting us who generate the data with the data we generate, understanding that it is ours and ours to use. Previously, banks, you referred to them as hyper-profitable oligopolies. I think I would describe them as, fat, lazy, and doing three things really with data: hiding it, hoarding it, and never ever using it. Certainly not for the benefit of the poor people who actually use their products. So what the regulator wanted to achieve, absolutely, with some competition, but really wanted to spark innovation, recognizing that us poor beleaguered consumers, small businesses as well as retail consumers, had big dumb products mass marketed at us without any consideration for us as individual consumers or small businesses for many, 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 many decades and longer, and that actually we might like service that worked for us, not B2B, not B2C, but B to me. Hyper-personalized, predictive, and preemptive service. So the innovation was a huge part of this. So that would spark something called financial inclusion. And I don't want you to just think that, oh, we'll make those vulnerable people, we'll make it slightly easier for them to access services. That's part of this. But absolutely every person who accesses financial services in the UK and beyond is underserved. We don't get that service, hyper-personalized, predictive, and preemptive. So with those things together, competition, innovation, with inclusion for all of us, you would actually get stronger in the stability sense. You would have more systemic stability throughout the sector, such that failure might happen, but that other financial services providers or other providers of financial services would be able to fill the gap. And fundamentally, what this is about is a stronger economy.
So, Gavin, this started in the UK. I realise you're not representing only the UK, but this started in the UK a little over 8 months ago.
What did?
Sorry, open banking. The banks opened themselves up to allow, or were ordered to open themselves up to allow new startups to connect to them and be able to use APIs to access the data with authorization from the customer so that they could then provide additional services. I mean, so, yeah, frankly, it doesn't seem that exciting so far. tell me what about progress? Are we making progress here, or is this really just very slow start and it's going to take a long time to build up?
It's a highly complicated area because the term open banking has become conflated with API.
Mm-hmm. Yeah.
And they're not the same thing. So I've, as an entrepreneur, operated in open banking since 2005.
Okay, open banking with capital letters, as the UK has
no,
called
I completely understand. But it's important because the thought of there being a big bang when a new technology was released misunderstands the key issue. I mean, the API was one element, and the other was the surety of the customer's role in consent, which Louise mentioned. The role of explicit consent. There's the legal and regulatory framework of the liability model that creates it and surrounds it. And then there's the regulatory framework that supports those. And then there's the technology that you build on top of that to make it easier and standardized. So the market in the unregulated space, prior in Europe to PSD2, has been consuming the customer's financial data for a long period of time. And even to this day, with the new API, there's roughly speaking, we think about 7,500 customers signing up to open banking enabled services that are using the credential sharing through to screen scraping methodology, and a fraction of that, maybe 5 to 10% of that, that's consuming the API. This time next year, that balance will have swung the other direction. And, but there'll still be the requirement for that old technology, because only at this stage the current accounts are being put through the API. And the journey to open banking and open finance will, within the next few years, continue to consume open pensions, open investments, open mortgages, open loans. And frankly, there's currently 3 million customers in the UK that are using data in an open banking way, just not all of it coming through the API. As a trade association, globally, our membership has somewhere between 250 to roughly 300 million. It's such a variance because it's very difficult between FinTechs in this space to get real clarity on whether it's the same customers. Could be a lot less customers using multiple products.
Yeah.
We struggle to figure that out. And the only other thing I would say, just in respect of the use cases, don't forget that it's always the innovation that comes before the regulation. And the regulation always looks to normalize things that are there because there's a point to it. They don't wake up in the morning and say, we'd like to go and regulate something in the hope that it creates a new market. So the reason the competition authority stepped in here is they could already see the rich variety of business models that helped with things like affordability and lending, new journeys into long-term savings and investment, personal financial management tools, and so forth. So I think it's slightly difficult to quantify it just in the straight measurement of how well the API is doing, because it's nearly there. And by this time next year, it'll be a very rich, highly technically delivered market.
Yeah. And in terms of threatening the banks, does it create? I mean, we've already seen the banks responding to some extent, launching their own programs in this space, their own apps. Is this something where the end result is that the banks merely compete with each other a bit more, or does it actually mean that there will be a whole bunch of new entrants?
Well,
like true new entrants. I know that lots of people try.
If I could, I don't want to come across as wholly flippant, but I don't care as long as there's really genuine innovation around the customer experience, and it doesn't really matter in the round whether it's large tech, big banks, small banks, FinTech. At the end of the day, what really matters is that there's a level playing field, and the people that come up with the best customer experience and the best customer outcomes should win most customers.
Okay, but a group of people who will care are anyone who owns bank shares in the audience, and also Eleanor, who owns, or whose company owns some challenger banks. or invests in some challenger banks. Who do you think are going to be the winners here? Or does it really matter from your point of view? Is this a key part of the investment case for challenger banks, new startup banks, or is it really an aside?
No. It very much so is a part of our investment case and thesis. So we believe ultimately it will be the customers more generally that will be the winners, whether consumers or SMEs. But in our views, also retailers, FinTechs, and I would say even challenger banks. All of them will have a role and benefit from the technology. We very much so encourage our companies, portfolio companies, but also beyond that, on this journey, and very much so active and proactive in encouraging them. And I think fundamentally, as already Gavin pointed out, it will be the customers, the proposition to the customer. One thing that I believe also in the UK, we have seen quite a slow start, and it will be slow start, because the proposition is quite not there. But the proposition will evolve, and once it's evolved and it's really meaningful, then you will see some meaningful shift from one to the other.
Louise?
The functionality in the API is not quite yet the same level of functionality that's in the screen scraping. And that's one of the key barriers to people moving wholesale across. But I think those things will be sorted out shortly. Sorry.
The people who want to win are the people who will provide and be capable of providing the very richest data upon which the very richest services can be built. And at the moment, the case studies that you saw from any regulator who's talking about open banking are incredibly basic, because it's just saying account visibility, basically, and the ability to make payments. And the way to think about it, these are the foundation garments of future, right? They're not the finished product. And what you will have seen old incumbents do is produce the very basic account visibility. And, yay. It's utterly underwhelming, and it's quite often a dreadful experience. But they're starting, they're learning, they're just doing it slowly. But the richest experience is always powered by the richest data. And the way to think about it in our open future is not to worry about what we've seen to date, because that's reporting on a very small period of relatively uninteresting history. What's really interesting is the potential, the possibility that's coming. And the way to think about this is to imagine yourself as a daisy. This always makes the men look slightly awkward. But if you imagine in your mind a daisy, yellow bit in the middle, white petals all the way around the outside, at the moment, the only petal of data that you can plug into your data daisy is your current account petal of data. And this you can use to plug in several current accounts, and it doesn't tell you very much because current accounts aren't very interesting. As you start to be able to plug in other petals of data, loan petals of data, savings petals of data, insurance, all of your different pensions, your energy data, your telco data, other data petals maybe around health, and this is where it gets really dystopian. As you can plug in more petals of data, you have a better looking data daisy with more petals on it. The more petals, the richer the service you will be able to attract to you. And the interesting thing is, who is going to compete to provide you with those rich services, which won't just be restricted to financial services?
So just draw me a picture. Is this, I don't know how many of you are familiar with USwitch. There are many similar comparison sites. Is this ultimately something where the online comparison site simply all is in one app? Because that's a lot of what people are presenting.
So I described.
Where does it go beyond that? Tell me why should I be excited about this rather than it being slightly more convenient than checking my 3 different bank accounts at the moment?
So it's not B2B. It is not B2C. It is B to me. Me as I'm living my life now through the petals of data I'm prepared to share with you. Me as I live my life over a period of years or decades, the services that can come to me predictively, preemptively, hyper-personalized, be to me, are the ones that will wrap around my life and provide for me, provide me the services which I need and deserve through the data that I have chosen to share.
So give us an example.
And this is where the journalist always wants the past. You want history, you want something
No. Give me an example of what could happen. I want to know what could happen. Okay,
exactly.
In the future.
So the conversation that took place at HMT in 2013, pursuant to data being added to the Second Payment Services Directive.
HMT is the British Treasury for anyone not familiar.
Sorry. Yeah, the UK Treasury played a role in pursuing the addition of data access to the Europe-wide Second Payment Services Directive. And at the time, the conversation was, okay, you've introduced this new regulation that makes professional advisors more professional, and they can't sell on commission. They have to sell with a fee-based structure. It was known in the market as the Retail Distribution Review. And the facts are that few consumers in the UK market know their bank manager anymore because they do their banking digitally. And even before that, the relationship of financial advice had deteriorated. And I think at the moment there's only, I think about 4% of the adult population of the UK gets professional financial advice. And the only thing that anybody has thought of in my entire world that could plug that gap are apps. Applications are only ever as smart, to Louise's point, as the data you put into them. So you can't make a decision in relation to which choice I should make. Should I pay off my credit card, or should I take that same bit of money and invest it in my pension? That pound or dollar can only ever be used for, one thing at a time. So if the apps are restricted from having full access to your financial data, they're going to make bad decisions for you. Ergo, we actually have a real duty of care to empower customers with their financial data so they can start to solve the problems in a world that has become simply way too complicated for humans to work through all the different prices and choices, and it's become beyond the competence of humankind to actually do it. So apps are the only thing that could be smart enough. We just need to give them the data.
So Ajay, you're developing these things.
Yes.
How smart are they going to be, really?
So look, I think there's a bit of a challenge in the way banks are structured, okay? Banks are structured on products, and they're not structured on customers. So that's a fundamental issue. So the data is a big challenge. So when I look at a bank which is serving me, they'll be looking at me as a mortgage customer, as a loans customer. So they don't have one single view, first of all. And that's the basic fundamental tenet of actually open banking. Can I have my data cutting across and serving me as a customer? So I think one of the fundamental things we're working on with the banks is how do we address the data challenge? And that's one. And there are some very interesting examples of not just UK, but building on the point you said on adoption of this. And if I look at historically, innovation has happened in mature markets, but what is happening this time in emerging markets is very different. So if I look at India as a model, right? India started this program called Unique Identity Program, which is a biometric to, a identity for each individual, 1.3 billion people. And India is going to become data rich before it becomes economically rich. And there, the government is facilitating this. So they've got the payments infrastructure. They got, and this interesting event which happened, demonetization, which triggered a barrage of new players. And a good example is a company called Paytm, which started a few years back. And it's almost become a lifestyle company. So I can transact on that. I can book my travel. I can pay my challans or my fines. I can get my insurance, mutual funds. So the compelling apps, the compelling propositions are there because the data problem has been addressed now. I think the more we address the data challenge, the better proposition and adoption would help.
So one of the sort of dystopian type ideas here is that I end up in the future with a choice of banking, shopping, buying my flights, booking my doctor, everything else. I can be in the Amazon ecosystem, the Apple ecosystem, or the Google ecosystem. And those three between them control absolutely everything. And I decide, maybe if the government allows it, I decide to take my data and move from one to the other.
Yes.
And that's slightly better that I can move because I own my data than if they own the data, in which case I'm locked in forever. But it's still not really the future innovative, exciting model that one might hope for. Is that a realistic dystopian outcome, or is it going to be
the way human mind works is we always imagine the worst, but
exactly, yeah.
But I would say,
well, I do say it's dystopian.
Yes, there's a bit of a balance for you to draw, right? If you look at the regulatory environment we have, things like GDPR, they do give the ring fence around this, right? So the opt-in features of the whole the API economy which will come in, the consent will reside in with you, and the more awareness we have, the better it is for us. I think that education piece is also fundamental to this, that how to use data, how my data is being used, I think, and then the regulatory framework will get...
But I would argue actually the regulation, and in specific in banking, the capital requirements will hold some of the big data-rich players back.
But one of the things in the UK environment, at least, is the capital requirements for the startups on the FinTech side rather than the banking side. So the people who might hold the customer, as it were, the capital requirements for them, I think, are £50,000 flat, not even linked to how many customers they have. I mean, it's nothing.
That's correct. Yeah.
And the liability is even worse. So the liability rests with the underlying bank. If anything goes wrong for the customer, the bank then has to sue the FinTech if it goes wrong.
No, that's not the case in PSD2.
Ah, but it's the case in the UK current model open banking, right?
No, it's not.
Ah, okay. Explain where the liability lies then.
There are two pathways here. Considered under the Second Payment Services Directive, through which UK open banking has to take all of its direction and power. There are account information service providers, so they're firms that the customer has given consent to aggregate their financial data. The other path is payment initiation service providers, which are third parties that the customer has given consent can initiate a payment on their behalf. So in the circumstance where the customer has made a payment and the payment goes wrong, the bank, the ASPSP as it's called, but let's make it the bank for ease, the bank has to immediately make the customer whole and may turn to the FinTech if they viewed that the FinTech had a role in misforming the initiation. In the account information service provision, which is predominantly what we're talking about, the sharing of data, as long as the data is landed and is at rest in a regulated account information service provider, a FinTech, the bank is completely absolved of any responsibility.
Yeah, I was thinking about the payments, because it's the payments that are the really interesting bit where I hand over. So instead, where I no longer have any dealing, I mean, this is when it gets exciting, when it moves. If all of these is aggregation, okay, that's fine. But that's just looking at my accounts. Then I have to use a different app to make the payment. That's going to be annoying. Many of the firms.
So if you look at the actual graph in UK open banking, the firms that are making the payments are universally a subset of those making the account information service provision.
Yeah, sure.
So virtually every firm that has the payments license is also aggregating the data.
Oh, yeah. No, yeah, this is what I mean. Though. These are the ones that are going to be the exciting thing, right? Is when my entire front end, the only thing I deal with is this, whatever app it is, and I no longer, the bank becomes a pure utility. And I can say, okay, well, I feel like switching from Citigroup to JP Morgan to HSBC, depending on who offers the best deal. But all of that happens without me having to change my password, switch, all the hassle that I currently have, switch my app, all of the thing, learn how a whole new system works. You take all that away and you put it all into one front end. That's really powerful, but then the liability becomes an issue, right? That the liability lies with the bank when things go wrong.
No.
When payments go wrong. Sorry.
When payments go wrong,
but this is the bit that's the bit we care about, right?
If you were to look at the UK model, though, which uses currently, for now and for a short period, this thing called the redirection model, where the customer consents with the FinTech and is transferred to the bank to complete the authentication, which is who is the end customer, and is it authorized? The bank will have a very difficult job proving that it was anybody other than them, because the last pair of eyes was on their digital real estate. And the one thing I would point out to the audience, just from a global perspective, the single biggest nut to crack in every single market that's faced into this having firstly established that the customer has some right in the data, is trying to figure out the liability model. So if you were to look at the difference by contrast between, say, PSD2 and the situation in the United States, Dodd-Frank 1033 is basically requiring the large banks to supervise the technology companies that connect to them, which means there's no clean separation of risk. When the data lands in the FinTech, the bank follows all the way across the line back into risk to supervise them. And currently the US regulators are trying to look at how they unwind their way out of that to try to work out whether we can get a clean separation of risk and whether or not that's going to rely, as it is in the US at the moment, on bilateral contracts or rest on the law, as it is in Europe.
Yeah. And Ajay, in terms of the developments around the world, I mean, India obviously has a strange situation because of this, billion people being given identity documents from nothing, and many of them being unbanked to start with. China's been a very interesting model where to speak of dystopian futures, where they're using all sorts of social data and passing it through to the banks with almost the opposite approach, that the government owns all the data and the customer owns nothing.
It's a bit rude to describe that as dystopian. It might be appropriate for that culture, for those people. You might think it's inappropriate in this culture, but it's a bit rude to say it's dystopian in China.
Well, I mean, you can have arguments about whether communist dictatorships are appropriate or not, but that's a separate thing, I think. But in terms of the banking side of things, it's is this something that emerging markets in general are going to power ahead and sort of leap in the same way that telecom systems in some places have leapt from literally nothing to mobile only, while much of the developed world spent a long time, with this intermediate step of landlines? Do we get a similar thing where emerging markets go from unbanked to open banking, sort of skipping a lot of the middle ground?
I think it's a good point, because tech is a great leveler, right? So I think one of the biggest inhibitors for mature markets is the legacy technologies that we have. So if I look at the banks we work in Europe, every bank is struggling with core modernization, which is...
Sorry, with what?
Core banking, which is the system which have been built 30 years ago.
Oh, this is COBOL, basically.
Yeah, I mean, this is very preventable, predictable, but it's inhibiting launching new services, new products. And I think the case in point for emerging markets is very strong because they've leapt ahead of the curve, right? And adoption of technology from a mobile perspective has been astounding. If I look at India, we have 1.6 billion mobile devices and a population of 1.2. So, almost. So I think that is helping them launch these services, adopt these services. And also, I would look at the demographics as well, right? If I look at the adoption curves, adoption happens largely in the younger population, urban populations, and emerging markets have a lot of that cross-section, which is helping them adoption as well. But I think the biggest challenge, be it in having discussions with the banks here and financial institutions, is the platforms and the old architectures that they have, and that's where bulk of the business that we're doing with them now actually is also.
Okay.
There is some read across also to Europe. I mean, the adapters in Europe are also the young generation too. But the one thing that I believe is also moving ahead, the UK perhaps a little bit faster than continental Europe, is the standardization of API and so on and so forth. When you look at Europe, there's no standard today, and so everybody's kind of there is today something called the Berlin Guidelines that some players are adapting, but there is not a consistent format across Europe, and that will slow down the progress for sure in continental.
And I think she makes a very good point, because standardization of APIs and the governance of APIs is two big factors which regulators are deciding. What is helping? I mean, if I look at the UK as a market, yes, I think we got the framework, the sort of prescriptive APIs. But if I look at Australia, for example, the adoption has been phenomenal there, right? Again, the government supporting it, standardizing it, trying to govern the APIs, what sort of system, process, experience APIs do we need to have? I think that has helped as well.
And also recognizing that they're not just disrupting one fat old lazy oligopoly. We can do 3 at the same time. We could do energy and telco at the same time.
Exactly.
And this brings to an interesting point about the difference between developing countries and developed countries. Developed countries will want to break themselves out of the hegemony of product. Developing countries want to increase the tax take. And if you do that through the distribution of mobile in the way that AJ described, if you do that through adoption of getting people to share their data, you can increase the tax take. And that's definitely one of the driving thoughts behind the countries around the world which are looking at open banking as an accelerator in their development.
You mean simply because the government can look at the data and see how much you...
No, I'm not talking about government visibility of the data. I'm talking about increasing the tax take.
But that's what I mean, is why does it increase the tax take?
Because greater services adoption, greater visibility of how those services are delivered. You're not doing everything in cash. It's exactly what India is. So it increased the tax take enormously in India.
So I think transparency...
Yeah, you mean because it's public. You can't hide it.
Transparency is a big factor.
Yeah, that's yeah. Okay, and in terms of the developed countries, who would you now say is furthest ahead? Maybe Gavin, Ajay, I'm not sure.
I mean, you have a bigger perspective on the global market.
So I guess the US is by a country mile the furthest ahead in the per capita adoption of open banking related services.
Just basically sort of Quicken plus or whatever it's called led the way, and everyone else is.
It was Yodlee and Cash Edge in 1999.
Right. Okay.
Then the large banks adopted before the FinTechs existed. Then the FinTechs started to build whole of market money management services, and then the small business accountancy services layered on top as well.
And this is all using screen scraping technologies.
Yes, but arguably, the US is now furthest behind in the regulatory spaghetti that they've wound themselves into.
Okay.
In terms of standardization, India stack, the whole thing from Moderator right the way through to Unified Payment Interface is something which is everybody should take note on, particularly the digital identity piece of it. I think in terms of the regulatory framework, probably Singapore and the US, Singapore and the UK are probably, I would argue, they're not exactly the same, but they're furthest ahead in sort of thinking through how this regulation is going to play out. And then in terms of scope, Australia, of course, have gone straight to a wider scope to include non-payment types of so it's a mixed bag, and what we're trying to do as a market is to look to figure out which bits we can get to interoperability with, which bits we can standardize, particularly on the tech, because it's probably one lesson. In fact, if I just get a few seconds to play out. So when the UK implementation of their API standards went live in January, each of the banks, the 9 largest institutions in the UK, had all self-attested that they'd followed the specification. And they were either marginally out right through to quite significantly out. Yeah. And it took a great deal of time for the FinTechs to connect to the bank's interface. It's really important, this, because if there are, let's say, 6,000 banks in Europe, ASPSPs as they call them in Europe, in the US there's something like 14,000, including a very long tail. An API works a little bit like an electricity plug and socket. What we found is that when the FinTechs turned up with their plug, it didn't quite fit the socket, and therefore they had to individually wire each appliance into the wall. And it creates risk and complexity. And if you think about all the different pen tests, the security audit, the maintenance when everybody does a slight change, it's a never-ending engineering headache, which proper standardization and conformance testing against those standards completely removes. So the model that I would like to see, and really work all the time to try to make happen, is proper standardization, strong conformance testing, rich, available, high-performance APIs, where the APIs are capable of carrying a data payload beyond payments.
Yeah.
And does anyone currently have that?
No.
Yes, you'll see. You will see some individual banks
Yes.
Right,
which
but no,
have created this. So
no country.
Starling are, will shout to the very hilltops that the APIs they have created are far richer than the standard specification. And they're constantly being asked, well, why wouldn't you implement the standard one? Well, because it does so much less, and our customers expect so much more. So their view is that they can provide much richer services through a much richer API, and that rich is the way forward.
So we work for the bank in the UK, one of the largest, and we developed some 500 APIs for them. These are across-system process experience APIs. And they didn't know how to use them. I mean, they're big budgets, and they said, let's develop it, okay? I think what's interesting happening is now is all these are coming to use now when they're launching new services. For example, they launched an SME bank. So all those about 112 APIs came to use there. So I think people have adopted different approaches to it. So one is the prescriptive way. The other is let's develop the APIs and see how it's getting consumed. I think that's a better model, and whosoever has the budgets, I think they're adopting that pathway. So.
Yeah, and there is very mixed, I would say, experience. You have BBVA, for example, quite I would say, leading in some of this thinking. But when you look at, they have created a number of APIs, right? But really it's not utilized much today, and they don't have a lot of activity. Then you can look at Sterling, again, very rich APIs, but not many customers.
Yeah.
Right. So it will take time to evolve this, right? And people really don't have the answers
But
to
it's
that.
clearly not a key point of competition yet, in the
Not
sense
yet,
that customers
no.
don't care about it, right?
And let's be absolutely clear: APIs are not the messiah. Right? They are one element which will drive rich services. But if you don't have any of the other capabilities that you require to be successful in our open future, you will fail. With the best APIs, the richest APIs, if you've got none of the other capabilities required to be successful in the open future, you will fail.
Can I know you've all turned up to a FinTech panel, but if you don't know what an API is, just please put your hand up and we'll explain, because it would be awful if you were sitting there all this time not knowing what we were talking about. So, no, everyone's all right. Good. That's fine.
I'm too embarrassed to say.
One of the things, just building on what Louise was mentioning, one of the sort of challenges that we're facing into as an ecosystem is if you're a really large FinTech, let's imagine you have as many customers as the bank to start off with. You don't want to be building a customer service that has an outlier. You want to standardize. So if you're, let's say, Intuit building accountancy software for the marketplace, you don't want to have to build a whole bespoke suite of software to support Starling, which are a relatively small player. If you're a tiny FinTech and you're looking to get some kind of differentiation in the market, you may want to partner with one of those banks offering a richer API to try and showcase what you've got to offer the customer. The key difference here is just the mass market nature of standardization. As I say, the large FinTechs want to have a base plate of standardization and then continue to build the base up, not to have shooters that are unconsumable.
How much, I mean, maybe Ajay, as someone who's been there in the development process, but how much are the big banks developing these systems to be very slightly different to each other as a deliberate way to frustrate people?
So I think the APIs are going to be very standard. I don't think so there'll be a difference in the APIs because there's a standardized way of developing them.
But you've just been hearing that they're actually not quite. They're all just very slightly different.
UK it's not, I think, because there's a prescriptive way of doing it. I think the use of them would be interesting, right? And how do you develop applications and bring the data element to this? I don't think so there's like Louise also mentioned, there's something rocket science in the APIs. I don't think so there's anything. And we are also driving a lot of reusability now. So for example, the work that we did for one bank is being used for 3 other banks now. Because we can bring the reuse of those APIs and develop.
I agree with Ajay, because at the end of the day, it will be the proposition to the customer, right? So what are you really how you're going to package the different services, how you're going to put it all together that the customer actually is going to move away from what they are doing today. The customer inertia, something exciting, something really they want to do not just they need to do, they want to do.
Yeah.
We will.
But doesn't that mean it's ultimately a business? I mean, the value proposition here is, at least for quite a long time, is probably in the business side of things, where for small businesses at the moment, their banking system's often incompatible with their accounting system and so forth. And this allows them to plug everything in and actually save quite a lot of direct cost if they can do that. Whereas for you or me having one of these, okay, it might be very slightly convenient that I change my electricity provider once a year in some automated way, but it's really not that big a deal.
Some very large, very large, the largest US banks have used aggregation services to get a full view of their own customers.
Yeah, okay.
Slightly ironic.
So using this to plug in all their own different systems to each other.
Yeah, I just wanted to also go back. You mentioned what is an API. I gave one example of how I define it to make it easy for people to follow with the electricity plug-in socket. But that's the security profile. The API has a second part, which is the data payload.
Yeah.
And if you have the connection, it's a bit like having a common electricity plug in your house. You can plug any appliance into it. So if you have the connection between the institutions, you could put any form of data you want. You can enrich it. And it's relatively easy to map. If there's a slight adjustment in the data field, it's completely impossible if you can't make the connection. So in the UK, to the point about the difference between specifications to the Berlin Group or STET in Europe, and what happened in the UK model was that they were able to impose automated conformance testing suites, so that they tested the shape of the plug and said, are you there? Are you the right shape? Are you available? Every few seconds. Yeah. So we were able to actually force true standardization for those artifacts, which is something, having gone first in this, I would say to anybody else that's looking at this globally and say, if you're wanting to get something that really works, you have to have conformance testing suites to make sure that it is properly standardized. Otherwise, it's just a riddle for everyone to solve daily.
Yeah. I would also add to that, just to move us away from the technical side of things, if you are thinking as a government about implementing something that looks like open banking, there are three things that you need to think of beyond the minutiae of specification and security, which is critically important. One of which is the governance by which you will deliver your implementation. It should be transparent. It should be very clear and very accountable. Secondly, you want a process which is solid enough and decent enough that people want to participate in it, but not so burdensome that they can't participate in it. So many of the smaller, more innovative companies in the UK were excluded by the resource-intensive process that we implemented. The third thing that you need to have in place is absolute clarity of decision-making, so that if you do show up and you do want to participate in the implementation of something which is so important to your economy, that you understand that your efforts have been taken in through that decision-making process. So I think those are three of the additional things that you need to think of, in addition to the technicalities of API specifications and that security, authentication, conformance testing, and the like.
We've got time for a few questions. If you want to put your hand up, we have a mic going around. But while you're thinking about your questions, one thing we haven't talked about is security and trust. I mean, all the surveys show the one barrier to this is trust. People won't take it up because of trust. I did my own little survey of all the millennials I've met the last few weeks, asking them if they use these, and the vast bulk haven't. And when asked why, they all say trust.
I've been asking this question since 2005, when I launched an aggregation service in Europe. And the simple facts are that if you frame the question in one way, you get one answer.
Yes.
If you frame it in the other, you get another.
Okay.
So if you said to people, do you want to have an application that sits on top of your financial life, monitors all of your accounts, makes sure you don't go overdrawn, and holds all of your financial service providers to account? The answer is going to be yes. If you say, in a more kind of theoretical position, would you be prepared to put all of your financial services in an app that you've never heard of? Everyone goes, no, why would I do that? So it just depends what the context is.
Well, the
also,
context of
market research is frequently absolutely shocking, right? It's done really, really, really badly to engineer the answer that you want. But remember, people will also lie. Even if it's a really well-done piece of research, people will tell you that they don't share their data because they've been told sharing data is a bad thing. But people share their data with impressive promiscuity on a daily basis to access the services they find valuable and, crucially, enjoyable.
So I did my survey, which was entirely unscientific, merely by asking people if they actually used the things, to which the answer was usually no. And I said, why? And the answer then was trust.
Well,
which,
you can't actually consume open banking.
Yeah.
Nowhere can you go and say, I'd like to have some open banking, please.
Well, you can download plenty of apps. I mean, okay, they're still using screen scraping technology, but they're there.
Yeah, so you have to have the showcase of the appliances in the shop that you then come and plug into it.
Yeah.
And it's the appliances that the customer finds attractive, the things that they want to achieve, the things they want to do with their money, the places they want to save that are attractive.
So is this just a failure then? Sorry, was that hands over?
Do we have a question?
So is this, I mean, Eleanor, is this a failure by the challenger banks? And I know you don't speak for challenger banks in general, but the challenger banks haven't made much in the way of inroads, really, in Europe.
So addressing a little bit what Gavin was saying, right? To me, it's not that the people will not trust. So, for example, the open banking is not just related to new players, by the way. The open banking also applies to our existing players. Yeah. And there is a trust, right? So there is not a trust issue. The challenger banks, and most of them today, the established ones already have trust. I doubt there is an issue with trust. The ones they are trying to do a true what I call open banking platform, whether the Sterlings, the Revolut, N26, those guys, those will take time, right? Those will not happen overnight. They have not many customers today, it's true, but I will think it will be a blend of those players. They will have complementary products as well as the challengers. They will open up the other services to other players that they are not offering. And I think even the large banks ultimately will change the way how they do business.
See, my own sense is innovation will not come largely from the banks, okay? So innovation will come from outside.
Definitely. Even in the challenger banks, you need to bring in innovation from outside.
If you look at the contactless payments, right, it was there since, I think, 2006-07. Yeah. It triggered, the tipping point was when Transport of London got that contactless thing done.
Yeah.
Right? And that was the tipping point, right? I think we'll have something of this outside the banking industry because banks are in itself in a very defensive position. They're not overly embracing this, at least the larger banks, right? So they feel a bit, I mean, the systems are not ready, the infrastructure is not there, and there's no compelling sort of applications also available. So I think it'll happen outside of it rather than within the banks.
And we mustn't restrict the conversation to banks, challenger banks, and FinTechs. Innovators in practically every other sector are recognizing they can access this data, they can leverage this data. So obviously, whether you want to talk tech titan GAFA, or whether you want to talk FATBAG, which is obviously the acronym which includes our Chinese players as well, there are really interesting innovators recognizing that they can access this data. Telco players, for example, are recognizing they have a right to develop the services which their millennial audiences, giffgaff I'm thinking in particular, want to be able to access and recognize that giffgaff is a way for them to do that. So I think don't restrict, in your minds, never restrict this conversation to banks, challenger banks, and FinTechs. It is far broader than that.
Well, Louise, hang on a sec. We've got a question over here. Sorry, right at the very end.
Yeah, hi. Sorry, my name's Eric Kilstrom, and I have no experience in banking, but I do have a healthcare lens, and I actually think there's a lot to learn about open banking in healthcare. Trust is an obvious one. NHS is an example of how not to ask for individuals' data. You were talking about theoretical. Boy, they screwed that one up. But also, so how you ask the question is really important. But I'd be really, I would love to hear the panel's opinion on what can healthcare learn about open banking in the healthcare space. People are looking at this, and it'd be very interesting to hear your opinion.
I think the same characteristics that any organization to be successful in our open future really praised, come see me after for more detail, but one of which is brand and its elasticity of brand, the ability to deliver new services in new ways to new audiences. And we talked about trust here. Let's talk about what that really means. It's the ability to keep that data flow open in order to access the service and to continue to access the service. You've got to be able to talk to and listen to the individuals you serve individually and at scale simultaneously. You've got to offer them rich services that they wish to consume, not just now or at one point in time, but continually over time, so you can increase the depth and broaden the richness of that service. You need the API layer, of course, to be able to access that data, but understand that the data which underpins this is not just the structured stuff that the data scientists like playing with. It's all of the messy, unstructured data, the unstructured text, the unstructured images, where the real richness and value lies. We don't just need data scientists, we need data artists.
My take on that is, not too dissimilar to actually open banking. You would want to have one united picture of your health history. Of your health, over the last whatever, since you've been born or whatever, since you went to, since you're adulthood, right? In one picture, track your data, track your, annual checks, track your doctors that you saw, and equally, you would want to have incoming sort of suggestions what you should do because of your health information. Exactly. Okay. So there is a lot of cross-read between open banking and healthcare.
Thank you very much, everyone, for coming. You can watch all the other panels that you've missed because you were here on milkeninstitute.org, and I think you can also send feedback from the app. So thank you very much for coming, everybody.